everybody has now learned that the dollar is a liability and not an asset. So i.e. dollars can get taken away from you at will. So even though it looked like a very smart move to weaponize reserves and the financial system, what is actually happening is you are now forcing the de-dollarization of the world. We've thrown a war at crypto. We've thrown Chinese bans. We've thrown all sorts of stuff. 8% inflation, central bank with an expected 8 rate rises, which is never going to happen.
Raoul Pal has reacted to the sanction imposed on Russia by the West due to the invasion of Ukraine and its potential effect, as well as the role Bitcoin will play in the coming global financial crisis, which at this point seems unavoidable. A sanction is a penalty imposed by one country on another, often to stop it acting aggressively or breaking international law. Sanctions are often designed to hurt a country's economy or the finances of individual citizens, such as leading politicians. They are among the toughest measures nations can use, short of going to war. Western leaders have frozen the assets of Russia's central bank, limiting its ability to access $630 billion of its dollar reserves. The United States, Canada, the European Union, and the United Kingdom have also banned people and businesses from dealings with the Russian central bank, its finance ministry, and its wealth fund. Selected Russian banks has also been removed from the SWIFT messaging system, which enables the smooth transfer of money across borders. The ban will delay the payments Russia gets for exports of oil and gas. Western governments have also imposed sanctions on some individuals, including a hit list of powerful, wealthy businessmen and women close to the Kremlin known as oligarchs. Russian President Vladimir Putin and his foreign minister Sergei Lavrov have also been sanctioned. Their assets in the United States, European Union, United Kingdom, and Canada will be frozen. The United States has also imposed a travel ban on both of them. In a video released yesterday, Raoul Pal, the CEO of Real Vision, shares his views on the global financial and economic crisis that will result from the sanctions on Russia. Before we listen to Raoul Pal, we want to appreciate all our viewers and subscribers. Thank you so very much. Please take the time to smash the like button and consider subscribing if you are yet to do so.
Everybody has now learned that the dollar is a liability and not an asset. So i.e. dollars can get taken away from you at will. So even though it looked like a very smart move to weaponize reserves and the financial system, what is actually happening is you are now forcing the de-dollarization of the world. Now, my view on that is that's a slower process. Obviously, Russia just got thrown out, but they've been planning for it. Let's be absolutely clear. Russia's been planning for it. They probably didn't imagine it this fast, this apocalyptical, but the Chinese will be planning it too. The central bank digital currency is part of that planning. So everybody wants to move away from the dollar. And right now, the instant thing that any central bank can do is own more gold. So I think this is a very bullish gold environment for central banks because that's what they do. It's an asset that they're comfortable with. I also find very concerning at a geopolitical level that we have frozen the assets of people that have not been tried in any sort of court. Now, it depends whether there's a confiscation going on here or freezing of assets. It depends on EU law and who's taking what. But it tells people that property ownership is not something that they perceive. If you own a property that's not in your jurisdiction, you don't own it. So I think that is, again, a shift that's going to take people's mindsets. Obviously, all of these trends are very bullish for Bitcoin particularly, but the crypto world overall over time. Now, crypto trades both as a risk asset and a store of value. The store of value element is becoming predominant right now and very clear. The risk aspect, well, it's a bloody risky world out there. So let's wait and see. China, how that plays out in all of this, we don't know. But China's been moving towards separating. And I can't yet think of all of the ramifications as we are already splitting these worlds apart. If this gets accelerated, what does that do? But the world is a net debtor in dollar terms. And the more of these debts you start writing off by forcing people out or seeing defaults, the higher the dollar goes. And the dollar is a big risk here. So if you get a liquidity squeeze, the dollar goes up. The dollar's the one thing that I'm looking at, but we also know that the Fed try and stop that because they know the dollar is the wrecking ball. They can't let the dollar go up too fast. So they start supplying the world's banks with swap lines. So every time they've done that in the past, it's eased the issue. But here you've taken out a very big economy. I mean, Russia's gigantic. Russia probably has more natural resources than the rest of the world added together. It's something of that magnitude. So the GDP may not be big, but its asset base is enormous. And without that in the world, we end up with a huge loss of trade. And we've also got these dollar liquidity issues, which I think will bite the Europeans, bite the US, and bite everybody else. So I think that's all setting up to be a bit of a mess. The Fed will come in and try and flood the market with swap lines. So the money printers start in different ways. And I know there's a lot of people who watch this go, well, that's not money printing. It's enough to start changing the denominator effect of certain assets. So be cautious of that one. I actually like bonds in this environment because if you raise food and fuel and input costs, you're destroying demand. We've already seen demand slowing.
Raoul Pal believes a big global financial problem is coming and thinks bonds will fall in yield. According to him, U.S. bonds are a safe haven right now. He is of the opinion that bond yields will come down towards the 1% level. Europe is under pressure to transition in the medium term, away from reliance on energy from Russia or maybe Algeria, which is a southern neighbor that has a decent amount of gas. They have to move away from that. And the only way is to go towards renewables. There is a friction point, however, it takes time. And that friction point can cause supply disruptions because there's not enough supply, and there's still demand for it. So that has to change over time. But he doesn't think the Europeans want to get rid of the carbon system they set up. So I think the Europeans are going to start dealing with pain via fiscal stimulus, he stated.
I think they're going to have to give people money to pay for the rising cost of fuel and food. Bonds, I think, are a decent bet. Gold, for the reasons we talked about, are a decent bet. Long term, I think it plays into what crypto is and means in this world. A distributed network that's not owned by anybody but owned by everybody is almost priceless in a situation like this. If they finish the invasion and then we get some clarity. Clarity is what markets want. Is it going to go into World War III or not is what we're trying to grapple with right now. If not, that's okay. Markets could rally. Then they have to deal with the recession coming. The markets sell off again for that, quite possibly. So it's not very clear. Equity markets are troublesome. I've been waiting to buy tech, and I don't think we can get there until we start to see the monetary spigots opening up again. And I think they will come, and I think they'll come in form of transfer payments. So to make sense of the world, buying commodities doesn't feel like a good bet. The ramification of the high commodities, which is slowing growth, makes bonds a good bet. The ramifications of the weaponizing of reserves makes gold a good bet. The dollar is generally quite a good bet on a massively key level against the euro. I've been tweeting about this. If it breaks the kind of 109, 108 level, I mean, it's going down to 80 cents. I think that's probably likely over time, but I think the central banks will step in first to try and slow it. It probably goes down over time because Europe has no choice now but to militarize. So Germany has kind of kept away from doing that. Most of the nations had. They're now going to probably have to break their 3% budget deficit, implied rule that they never stuck to. But the Germans can't increase its military or its spending to NATO without doing that. They're going to have to do that in this situation. So even in scenario one, with the dirty compromise, the Russians, the French, the Italians, everyone's going to have to spend on military. So there's a huge boom in the industrial military complex, as ever. Those guys make money out of everything. But that means that deficits run and the euro potentially weakens over time. And it weakens over time also because Europe is threatened. So do you want to own your money in euros? Less likely.
The United States is much more removed from the situation, and that makes the dollar much more attractive. Europe just hasn't been producing the kind of growth that the United States has had at the corporate level. So Raoul believes the euro will fall significantly over time until maybe Europe has built its defenses. While Raoul Pal is very bullish on the dollars, he, however, issues a word of caution for investors to be careful because of the involvement of central banks. Because we are dealing with human behavior at an individual's level, Raoul Pal thinks it's virtually impossible to assess probabilities. We don't know where Russia's line is going to be and who's going to side with whom if the crisis escalates further. We don't know what it means for the Middle East. We don't know what that means for China, so Raoul Pal believes that we can only make a bunch of assumptions at this point.
So I think it's best not to try and be too clever, too cute, pick the exact scenario, but go at the toppest level macro to say, okay, what are the things here that can help protect me? And those will be gold, bonds, dollars. And I like crypto, but I would prefer it if we had the central bank printing. It feels for crypto very much like the setup in 2020 in March when we sold off really hard, failed to make a new low versus the low a year and a bit ago prior, and then took off. We haven't made a new low. We've thrown a war at crypto. We've thrown, Chinese bans. We've thrown all sorts of stuff. 8% inflation. Central bank with an expected 8 rate rises, which is never going to happen. And crypto didn't make a new low. So I think there's a signal there, but again, we need to watch it. I don't think that's the bet to put all your money in right now. All of my money's in it, but I am adding to these other trades. The crypto situation gets interesting, I think, as people start to realize that at sovereign level, this becomes a solution for them too. And the rise of central bank digital currencies, they're moving away from the SWIFT system. That's all coming into this game.
Whatever the outcome of the Russian invasion of Ukraine and the ensuing financial sanctions, one thing is certain: 2022 is going to be a financially tough year globally. Only those that are well prepared will be able to smile through the coming crisis. A global depression is a very real possibility at this point. While we continue to pray for the people of Ukraine and the Russian citizens suffering as a result of this war, we hope for a speedy end to the fighting. If you still don't have Bitcoin in your portfolio, we believe there has never been a better time to buy some Bitcoin than now. With the coming financial crisis, Bitcoin may just be the best hedge to inflation and financial freedom, free from sanctions and control. Thanks for watching. Stay savvy till our next video.